Hey, I'm Juan. Thank you for joining me. Today, we're going to discuss what's going on in the market and what to expect tomorrow. So the biggest news headline is, what will Powell say? Will he be hawkish with his tapering? If he's hawkish, if he increases the amount that they're going to taper per month, what kind of effect will it have on the stock market? So right now, if you go back to one of my videos, I talked about tapering and quantitative easing. Since the pandemic, the US has been printing money like crazy, $120 billion worth of purchases every month. And here's what that looks like. So they've been purchasing U.S. Treasury bills, about $80 billion a month, and mortgage-backed securities, about $40 billion a month. So they've doubled their balance sheet. And right now they're talking about tapering, buying less or spending less every month. So initially, they talked about cutting that $120 billion a month to $15 billion a month. That was what was discussed in November. And if that's done, then you divide 15 by 120, which is about 8 months. So over 8 months' time, that would take down the spending to zero, the $120 billion that they're spending on the treasury bills and the mortgage-backed securities to zero. And then that's when the interest rate spike will start. I anticipate that they're going to have an initial interest spike, and that within the next 2 to 3 years, they're probably going to have 2 or 3 more spikes until they reach their target of whatever 2% more. But the big thing is, what will they discuss tomorrow? I personally think that 15 billion is not going to be enough, and they're going to double that, and they're going to taper by 30 billion a month. So in 4 months, they'll be down to zero spending per month, and then the interest rates will start. Why is this important? Why is this a big deal in the stock market? Well, the higher the interest rates, the lower the evaluations on the companies. So especially a lot of these high-tech stocks that are highly evaluated, they've been evaluated because the interest rate was at zero. And now if they raise the interest rates, these evaluations are going to go down drastically. So a lot of these companies are overvalued, and that's why you've been seeing a drop in some companies. That's going to be the big topic tomorrow. They're also going to announce, the same way we had consumer price index, the inflation from the consumer side, they're going to have inflation from the seller side and see if it's been increasing, which it has. So that's the big news. If Powell doubles the amount, which I think he will, I think they're going to increase by 30 billion per month, then you should see a major pullback on a lot of stocks. So this chart here, it gives you an idea of the balance sheet and where we're at here. They had quantitative tightening and then pandemic, and you see here the balance sheet doubled, taking it to 9 trillion. And now here, this is the question mark. What do? Taper. So yes, they're going to taper. Right now, they're spending 120 billion a month. They're going to take off 15 billion per month starting in December probably. And that pace would end here, the 120 billion buying program in June or July. Like we mentioned, it'll take about 8 months, because if you multiply 8 by 15, it's 120 billion, which is what they're spending a month. I think this is going to be doubled. I think they're going to taper by 30 billion per month, ending the 120 billion buying program in about 4 months, and then the inflation will start after that. So that's on the top of everybody's headline, and everybody's going to be listening to Powell tomorrow, and I fully expect the market to react to whatever he says. Yesterday, when I talked about the meme stocks, today is another article. Today, they talk about the decline in GameStop and AMC. We're under pressure again, pre-market trading. GameStop fell nearly 14%. And I mentioned this yesterday, that it seems like these meme stocks are starting to die off. Pfizer has just been killing it and benefiting so much from COVID. They have another article stating that the antiviral COVID pill still showed nearly 90% efficacy in preventing hospitalizations and deaths in high-risk patients. Recent lab data also suggested the drug retains effectiveness against Omicron. Nobody in the trial who received Pfizer treatment died. So this is really bullish news, and I think it seems like we're getting ahead of this COVID. I think it's getting a lot better, and you can see that in a lot of the cyclical stocks. So also they did a large-scale study in South Africa released Tuesday. Pfizer 2-shot COVID vaccine provided 70% protection against hospitalization from the new variant, which is great. The study has been conducted in the week since Omicron first announced in November by scientists in South Africa. They also talk about the Senate is expected to vote Tuesday to raise the federal government's $2.8 trillion debt ceiling, avoiding risk of a default later earlier this month, and that was actually voted, and the Senate did pass a 2.5 trillion debt limit increase, which many state that it avoided a potential default. So what is the debt ceiling? The debt ceiling is basically the debt limit. It's capped on the total amount of money that the federal government is authorized to borrow via U.S. Treasury bills and saving bonds to fill its financial obligations. Because the U.S. runs budget deficit, it must borrow huge sums of money to pay bills. So they've increased the limit, therefore not going into default, which they consider a success for now. Tesla is up around 35%. Elon Musk sold another $906 million worth of his shares. And Musk, who is the wealthiest person in the world and who was just named Times Magazine 2021 Person of the Year, still has millions of stock options that he needs to exercise by August 2022. So Elon has a big effect, obviously, on anything with the market. He announced that Tesla will be accepting Dogecoin for certain merch, and Dogecoin spiked 20%. We see here that it was initially trading low 16 cents, spiked up to 21 cents, and now it's kind of like consolidating. Ford dropped 1%, hit by plans from Toyota to invest $35 billion into battery-powered EVs, an area Ford wants to establish itself as its leader. Toyota aims to increase global sales of battery electric vehicles by 3.5 million units a year by 2030. So beyond meat, actually, I was thinking about this yesterday with inflation. When the CPI, they showed that meat and veal and different types of meat spiked up. The inflation of it spiked up about 30+%. And this would have been a good swing trade for Beyond Meat. The Harvard Business Review made a great article on how NFTs create value. And they basically talk about how in the past someone can create some sort of digital art, but there was no way of having clear property rights to that digital art. Before, you can buy someone and someone has the right to sell it, but you weren't able to transfer ownership because they can make copies and someone else can take it. So NFTs solve this problem by giving parties something they can agree and represent ownership. In doing so, they make it possible to build markets around new types of transaction, buying and selling products that could never be sold before. These non-fungible tokens suggest each NFT is unique, one-of-a-kind digital item. They're stored up on public-facing digital ledgers called blockchains, which means it's possible to prove who owns a given NFT at any moment in time and trace the history of prior ownership. So this is the benefit that NFTs bring. It's a different type of asset. Someone can create some sort of art and get paid for their art. This yacht was sold for $650,000. It was sold on the Metaverse. It definitely has our attention. It should have your attention. Art has always been profitable. There's certain apps where they kind of crowdsource and buy art together, and it's just like investing in stock, except that the company will buy a piece of art and then they'll divide ownership of that art amongst anyone who invests. So you can have thousands of people investing and just buying a small portion of that art. And as that art increases in value, your portion increases. And they've said that some of these art pieces have actually beaten the S&P over the last decade. Digital art is going to be just as profitable. So this is something probably over the next year, I'm going to be reading up a lot more on metaverse, on cryptos, on NFTs, and just try to become as efficient as possible in this field. But this phenomenon, NFTs, digital arts, they're just creating a whole nother market. And they state that the creator economy, meaning people that now call themselves creators, this economy has prompted a 450% year-over-year surge in the number of LinkedIn titles using the word creator. Forbes reported that 50 million people in the world consider themselves creators, and 33% of kids from ages 8 to 12 now dream of becoming a YouTuber. On other news, positive news here for Uber. Uber shares jump after CEO says company just had its best week ever. Is it a good time to buy Uber? It definitely deserves some due diligence. You see here, it did have a spike down from 35 all the way up to 38, 35, and now it's kind of like consolidating. So it looks like it's if it breaks this trend here of 37.60, could expect it to retest the highs here. And you see this line here, it correlates perfectly with the 13 EMA here. You see the 13 13 EMA here. It spiked up, tapped the 13 EMA and wasn't able to break that. If it breaks the 13 EMA, you could expect an uptrend if you're going to swing this or buy some calls. Another article here, and this is a result of probably what you're seeing, the increased inflation. You're going to see a lot of stocks start to plunge and drop in price because they were overvalued. And this article here states that cloud stocks, Adobe, Cloudflare, plunge on JP Morgan downgrades. A lot of these stocks were downgraded and they plunged quite a bit. My stock that I'm extremely bullish on. So the way I look at this stock, RBOT, and I did do a video on it, because they haven't received FDA approval yet for their surgical robots, because they have no revenue right now. This is their only device. This is more of a, hey, I'm pitching to you an idea. Do you want to invest in it? Kind of like capital fund type of play, because there's no revenue. Anything below 1050, 1040 is, I'm going to keep buying more. I would have to say this is probably my number one conviction stock. Like, I just love the technology. I've spoken to a few surgeons, and I really think that this is just going to be, this is a unique robotic surgical device that's going to change the healthcare sector. The Da Vinci has dominated robotic surgery, and it's great. There's still a place for that, but this is an upgrade to the Da Vinci by far. You have to think the Da Vinci received FDA approval in 2000 and was created about eight years before that. So it's 30 years old. It's a 30-year-old prototype, and people create things according to what their environment is. So at the time, kind of like compared to a manufacturer type robot, opposed to this surgical device, it's just super flexible. It moves just like your arms. It even has these actuators that kind of twist and allow more movements, opening the doors to a lot more surgeries that can be done robotically that couldn't be done in the past. Smaller incisions, which lead to better recovery rates. So I'm extremely bullish. This is the first robotic device that received FDA breakthrough. So that was just a quick recap. Thank you for joining me. I hope you enjoyed it. Don't forget to subscribe, comment, and like, and see you on the next video.